Georgiana, when you look at the battle that's out there, what's unique about this December?
What's unique about this December is that if Congress doesn't act as of January 1, exemptions are going to go down in the gift and estate tax world. Right now, you can give up to $5,120,000, and if you're a couple, $10,240,000 tax-free. As of January 1, if nothing happens, that's going down to $1 million per person. And rates are also going to go up. Right now, it's a 35% gift tax rate and estate tax rate. Next year, if nothing happens, it'll be 55%.
There's a certitude from Mr. Buffett, Mr. Gates Sr., and others that we should pay an estate tax. Essentially, no one I talk to agrees with that. You people have a cottage industry of trusts, estate planning, generation skipping, generation skip, all sorts of different vehicles to avoid this angst. Does Washington have that message? Why would they come down to 3.5 million or 1 million? If anything, they would want to go up to gain more tax, right?
To go, well, I guess, you know, I guess if you know rates, you know, if you want to gain more tax, absolutely you want your rates to go up and you want your exemptions to go down. But for most people who have great wealth, they start planning early.
Yes.
And they transfer things in trust. Most of our clients have already transferred the full $10,240,000. They started January 1, 2011 when they saw the exemption go up. They leveraged the assets that went in. They invested it well. They pay the income tax.
And these are not 75 years old. These are 45-year-olds.
Absolutely.
That's the key message here.
Absolutely.
Well, what do you do now? Are people giving away their money now? Can you protect yourself from this increase coming?
Absolutely. Indeed, we've seen the biggest surge in doing these trusts ever since the election. We have people, I had someone call me on Friday who we've been talking about estate planning for many years, and he said, can we get it done before year end? So we've been creating the trust, transferring the assets in, and trying to get it done as quickly as possible.
What's the number one thing that average Americans, not people with $1 million or more than $1 million, what's the number one thing they need to know about their taxes in the next year?
Well, for them, it's not going to be the estate or gift tax.
Right.
It's really going to be the impact of the change in the charitable deduction, for example. Because right now, you can give away, basically get full advantage of the charitable deduction up to 50% of your adjusted gross income. So if you made $100,000 and you gave $5,000 to your college, you would get a full deduction for it. Next year, those are going to change. There's something called the Pease Amendment, which will put an off-the-top reduction on your charitable deduction and all itemized deductions. And also, there's talk out there about a cap at 28%.
So have you seen a lot of your clients move ahead of that?
A lot of people are thinking about it, and a lot of people, though, are waiting to see what happens. Because if rates go up and they don't limit the reduction to put a cap in, you're better off taking it next year. If they don't get clarity before year end, though, most of my clients will go forward and have the certainty of knowing they get it by doing it by year end.
The body of work that you are expert in goes back to English common law, and many would say back before that. State to our viewers worldwide why we have a right to set up trusts and plan for our families against governments that after we've worked our whole life and paid taxes 3 or 4 different ways, they want to take that final hunk away. State the value of trusts right now.
You know, I think the value of trust, you work very, very hard. And you first are subject to the income tax on that. So if we have rates going up potentially just at the federal level to 43.4%, putting aside what you pay if you're a New York City and state resident, you pay tax the first time. You build up this wealth because you want to help your children, your grandchildren. You want them to be well educated and to be able to move forward in life. So to pay the tax again when you die and give it to your children, again when you give it to your grandchildren, at the end of the day, you know, you've worked extremely hard and maybe there's 15 cents.
Disappears.
It just disappears. Yeah. And it's, you know, and when you go back to $1 million
right.
per person exemption, it sounds like a lot of money. It's, you know, it's not.
Right.
Your clients have been taking profits, selling some assets in anticipation of these changes.
Yes.
Could that have bolstered economic activity artificially as a result? I mean, if they're selling houses and everyone's talking about the housing market recovering, isn't it kind of pushing it along?
I haven't seen much selling of houses. What I have seen is selling of securities because the capital gains tax rate's going up. And if you look next year, you're looking at 23.8% without any other changes happening. And that's, that is a big change from the 15% we have currently.
If Warren Buffett was sitting here, what would you say to him?
Well, what I would say to him, it depends on his objective. His objective seems to be more charitably inclined, so I'd say make some great charitable contributions this year.
Right now.
right now. And in terms of,
His estate tax criticism.
in terms of his estate tax.
Higher estate tax. Everybody should pay estate tax. What would you say?
I would say, that's taking an incentive away from people to work hard and help their families.